A lot of people are trying to figure out the same thing right now. Should I save or should I invest in 2026? And so today we're keeping this simple. We're talking about real UK numbers, we're talking about real outcomes and some comparisons. Nothing else. Let's dive deeply into this. Let's start with saving in 2026, and here is how the savings landscape actually looks like right now. So the top easy access and linked savers, we start with Santander Edge Saver, currently operating at 6% AER, and you can save up to £4,000 in each calendar year. The nationwide flex regular saver is also giving us 5%, where you can save up to £1,500. And the Kahoot Sunny Day Saver also giving us 5% AER, where you can save up to £3,000. On the other hand, let's also talk about the cash ISAs in April 2026. And if you are that person who likes to operate in cash ISAs, then this is something you want to be looking at. The reason is because if your ISA is not giving you the best value rate, there should be no guilt in moving. You can now do an ISA transfer without you closing one account yourself, where you lose entitlement and you have to hold on till whenever to recoup these monies, especially when you operate in the junior ISAs. Of course, your own cash ISAs, you can have access to you whenever and however. But if it's a junior ISA, but best way to access and move to a different provider is an ISA transfer. Go to your new provider, open the account to the new provider and request an ISA transfer from the previous to the new. This is an easy way of operating the cash ISAs. Once again, if you are the cash ISA user, you want to ensure that you are accessing this rate. If your cash ISA is not giving you this rate, please humbly move to a different provider without feeling guilty. So let's talk about April 2026 cash ISA. And at this point, I'm giving you the best cash ISAs in April 2026. Like I said, if your cash ISA is not giving you these rates, then you should be looking into transferring into a new provider. Let's start with Prosper Cash ISA, giving you 4.7% variable. This figure rate you see here is variable, which means it is adjusted based on the performance of the economy. If the economy is doing well, the rate is adjusted, and if it is not performing well, it is adjusted. And so please bear that in mind. You can go for this today, and dependent on the economic performance, there is going to be an adjustment. But with that said, this is a good rate for what we are experiencing in these trying times. Also, let's go to Trading 212, where you are getting a cool 4.68%, which is great on AER. I think this is also awesome. And then finally, we go to Plum, where you get a 4.57%. This is also AER. And if you ask me, this is awesome. Now, please, let me state this fact. The current inflation rate is 3%. And so if you are in any product, any savings account, and you are earning 3% or low, you should be moving. The reason is because your money will be eroding. But then if the rate you are receiving is more than 3%, then yes, it is a good savings too, and you want to keep that savings too. Once again, if that savings account is giving you less than 3% or even 3%, it is imperative that you consider moving to a new provider. Do not be emotional when it comes to finances. If you have to move, move. Okay, so now that we've considered some saving product, let's talk about investing in April 2026 and what the numbers are looking like. And to talk about this, let me bring to you the main man in the building who performs and is a part of a lot of people's portfolio, and that is a FTSE 100. This particular fund is a part of a lot of portfolios because it's a good hedge when it comes to diversification. And this FTSE, this is what it's performed over the years till today. I am bringing these together just so eventually we can assess its performance, savings performance, investing performance, and then we can now talk about recommendations here and there. And so please, if you have stayed till now, consider subscribing, leaving me a message, and staying tuned to the end of this video where I give a recommendation, and if there's anything you want to consider, well, the advice is in your hand to consider. All right, so let's dive into some numbers when it comes to the FTSE 100, which is the call of many UK portfolios. The current, for the last 12 months, the FTSE has given us a plus 21.89% outcome. Also, the past 5 years, it's given us 14.9% annualized. And the last 10 years is giving us 8.9% annualized. 2026 year till date, FTSE has given us 9.77% till today. So I'm talking about January till today as you watch this video. That is what it has actually given us. And see, this is the magic investment does. Trust me. This is the magic. If you are watching this video and you are not invested, do not know what investing is, what kind of fund do I even invest in, send an email to yatfinance25@gmail.com. Everyone needs someone at some point on certain journeys in life. And so please do not shy away from impact and knowledge and right direction. This is what can change the narrative with yourself. I haven't even gotten into the nitty-gritty yet. I'm still working on the surface of this. And like I said, this is the base. FTSE 100 is because it's a part of a lot of UK investors' portfolio. That is why I have chosen this. But it's FTSE the best performing fund? That is a question to ask. If you ask me, no. All right, let's talk about volatility, reality, and this is where you really want to pay attention. So in the last 25 years, in the year 2008, FTSE 100 performed its worst, and it gave us a minus 44%. That was the worst time, and it took 6.5 years to recover from there. So what does this mean? It means nothing is predictable when it comes to the stock market and investing. All right, so considering we're talking about savings and investments, then if you are in the UK, I will do you a disservice if I don't bring out premium bonds, because it's also another savings too, even though nothing is promised. The current premium bond fund rate is 3.3%, and this is not guaranteed. This is across all holders, and once again, it is not guaranteed. I personally hold over £17,000 in premium bonds, where I add up £500 each month. In January, I won £125. In February, I won £75. In March, I won nothing. And in April, I won nothing. That is what premium bond does. So you see, even with savings, yeah, sometimes it's good. Sometimes you can actually predict the outcome. I could also wake up and become a millionaire, a premium bond millionaire anyway. But hey, no one is promised that. But like I said, I needed to throw in this dice because I'm talking about savings, I'm talking about investment. And so it's imperative I mention premium bonds since it's also a savings too. And a lot of people in the UK use this too, believe it or not. Not many, but a lot of people use this too in the UK. If you ask me if I would keep invest £50,000 in premium bonds, no, I'm sorry. The maximum I am keeping in premium bonds is 20,000. The reason is because I do not want to miss the show. you understand? So I just said, let me drop in a little bit. It doesn't affect me anyway whether I win or not, because my mindset is already clocked in. And it forms just a bit of the pillars I have mounted when it comes to my financial structure. And so I am not worried what it does and what it does not do. Now, let's move straight into comparison. And now, for what you've been waiting for, here is what a £10,000 comparison over 12 months would do. And I state this emphatically. With £10,000 in a year, that is 12 months, savings will win. Yes. But for long-term, investments will win. Premium bonds only protect the funds. You are not promised anything. And so if you need that money, if you need your £10,000 from now to the next 1 year, I will encourage you to save. If you want to take a little bit of risk, yes, I can, but ensure that half of that money is in a savings spot, a good savings too. I've mentioned quite a few. If you need to open these accounts, by all means do that. And the rest can be in a low managed fund. A fund or an investment that has low volatility. And by so doing, it is always good that these come from advisors, financial advisors. Please don't take these risks with your monies. There's a lot taking place right now. and no one can actually predict what will come out of the stock market. But with a good diversification, one can be protected for a year if you want to put a part of that money in investing. But hey, if you do not have much to do with that fund, straight into investing for long term. And with long term, investment wins. This is my personal approach and how I am navigating 2026, considering the many factors and every other thing that is happening from the other side of the world, even considering what is taking place in United Kingdom, inflation consideration, and many other factors I have considered. This is what I intend and I am doing in 2026. It is not a financial advice to you. This is what I am personally doing. You want that advice tailored to your need, send an email to yatfinance25@gmail.com. Once again, this is only for educative purposes, and this is what I am doing in 2026. Premium bonds for stability and transparency. Also, my short term, I'm using a high yield savings account for all my emergency funds because I will need access to these funds here and there. Also, I'm investing aggressively, which I do not show that side of investments because I'm a humble person. I'm not here to show figures and make others. People are still building, people are picking the pieces together here and there. I'm not here to blow people out with huge sums of monies and everyone will be wondering what is happening here. So I do not intend to show that. And then finally, I'm also taking you on a journey of a 52-week savings investing challenge where I show you how discipline can turn and change the narrative of your life. And so if you haven't followed the series yet, please do, either on Yacht Finance Instagram, Yacht Finance TikTok, and Yacht Finance YouTube. Please follow these pages where every Friday I invest £50 into this pie that I have created, which I believe is gonna change lives. A lot of people should actually follow this journey and see what a 52 weeks can do to your life. I'm so excited for this journey. So if you ask me, this is my approach for 2026. And like I said, the one place I go aggressive is investing. And it's investing in across all borders, either physical assets, other liquid assets, and all sorts, dependent on the strategy and the pillars I've mounted in 2026. Someone may be asking why this. Remember, one protects, one grows, and one increases my discipline. Protect, growth, discipline. This is what my structure is laid on. Yeah. All right. So here is where I tap into what you are doing. What are you doing with your money? Are you saving? Are you investing? Now you've seen the figures. You've seen what is happening. You've seen what is working. You see the right accounts that are giving you the right benefits. What are you doing with your money? Are you saving? Are you investing? Drop it in the comment here. And as always, this is Yacht Finance. Send that email to yatfinance25@gmail.com. And please, if you haven't watched this video, by all means, do me the honor and get impacted, get educated. Share this video as much as you can. Once again, leave me a comment and please stay informed, stay educated, and stay wise when it comes to finance. God bless you, and I'll see you in the next.